Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, March 9th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. You can notice here that Sunday evening the market reopened and was hit pretty hard. This Sunday night looks very similar to this Sunday night, which was also followed by a big continuation throughout the rest of the week. This was just a holding pattern last week ahead of what's going to be another major decline like this perhaps this week. This could be very significant. Again, right now we are suspended limit down. So after the market dropped 5% in the previous evening here, we've been suspended since last night at this price, and we haven't moved. So right now the implication is perhaps a gap much lower and a continuation where this thing continues to crush to the downside. Now keep in mind, we are only at the beginning of this downside break. So this is our midpoint right here, which we reached from this low. We are only just beginning to break it. As of last night, we'll likely gap down and continue. But remember, we have downside targets that could be in play from the key range, and that could take us down back toward those 2300 lows. So at the moment, we have important levels that can take us down to 580 and then all the way down to 2300 based off the impulse move. So this could be very, very significant. Remember, if there's a failure to hold 2700, this thing opens up much more downside. That could be done right at the open based on how this thing reacts after the market reopens. So right now, very, very bearish, obviously. This is what I mentioned back in the monthly market outlook as well. This impulse range is very, very large. It's designed to keep prices in there for the foreseeable future. This looks different this time, and that could lead to a major flush here very, very quickly. Again, the market moves in days now, which used to be months back in the day. So I mean, this is much faster movement here. Be careful, mind your risk. If you don't have to play, you can sit on your hands. So you got to be very, very careful and defensive during a time like this. But at the same time, opportunities will arise at some point, but we got to let this thing flush, continue to flush lower. So we'll see how this continues to play out. But again, if there's a failure to reestablish back above that 2850, things could get significantly worse before they get better. All right, let's take a look now at the NQ here. The NQ, very similar again. Big drop here in the previous evening here, and again, I will go back to the prior May. I'll go back to the prior May, and it's very similar price action to what we saw when price was selling off in May for the ES of last year. It was gapping down Sunday to Sunday. Every Sunday a new tweet and a gap down, and it was very similar to this. Sunday night, gap and run. Hold, Sunday night, gap and run. It could be very, very significant. So again, it looks like this thing could continue to see much more weakness ahead, but we have our key range to continue to watch. So here's your high, here's your mid, here's your low. Again, if this thing can continue to stay above 8100, perhaps we can bounce. But right now, it appears that this is headed for major expansion back toward key levels that correspond to the range, and also prior pivot lows. 7,000 could be in play very, very quickly. Okay, let's take a look now at crude oil. Crude oil is having one of the largest single drop downs here since the Gulf War. As you may know now, this thing gapped down 10 handles here, and flushed down to 30 bucks initially. Flushed right down to 30 bucks, had a little bit of a bounce, and then got a major flush back down and bounced again. So 27.34 is the low. Again, if you go back to last week's monthly market outlook, I did mention that the weekly time frame looks as though it was going to go challenge that previous 26 low, because we did have a major coiled compression here, and it was breaking to the downside, or starting to, and that led us to believe that we could be headed back toward that low. Didn't quite hit the low, got a point off the low. I think 26.25 might be that low, something thereabouts. And let's see, low here 26.05. So it's about a point and a quarter off that low. And again, we're seeing a strong rejection here at the moment. We will see how this continues to play out here, but again, down 23% right now is crude oil, and we are at a major pivot low. So there could be, again, there could be some sort of reactionary bounce here that brings you back toward a gap fill. But again, the significance of this large wedge here that's broken to the downside in the weekly time frame suggests there could be even more weakness to come to take out that low. So again, keeping an eye on crude oil here to see, does it finish with a rejection day? Because even if it does, again, hard to see this thing going up to fill the gap with the existing environment remaining the same, if not worsening, with regards to the coronavirus and the economic spillover. So if we take a look now at crude oil, or rather gold, you'll see gold has poked through 1700 for the first time. First time in 7 years being this high. Again, we knew the key levels to continue to watch as we went forward. We knew that this was a good low here. We knew that breaking this 1375 suggested a 1525 move, and we knew if it broke 1525, we could be working our way towards 1700 and 1800. So right now, this thing remains bullish. As I've mentioned before, we go higher in spurts in gold and then hold and go higher. This thing could see more trending behavior overall to the upside. And again, as long as this thing holds above 1550, 1560, more upside price action is likely to be seen. All right, everyone, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.